then in a sense, are you saying that the stock market is a bit behind the curve compared to, say, the insurance world? Because in the insurance world, obviously, they are super conscious and super aware of climate risks. They're having to pay out now for these extreme fire events, flooding events, droughts. There's so much going on in that world that they are just having, by their very business model, to price this stuff in now. It sounds as if you're saying the stock market is actually a bit behind the insurance world. It isn't pricing in those risks. Because there's two things, right? There's the risk to a company if they're not going to adapt and have a plan for what's happening in the world. And then there's the companies that are more positively developing solutions. So that should be very highly priced, you would think. So are both of those not being priced in at the moment by markets?
I think you're absolutely right that we as a society don't pay enough attention to those risks. And I think, a bit of a sad example of what happened, obviously, in California, at the beginning of this year, is so many people that actually still had the same house that wasn't actually ready for fires, even if we knew there was a very high risk, to the point that actually, exactly what you were saying, insurance industry was no longer actually offering insurance for those households. And if they wanted to get insurance, they need to go to the state-backed insurer, kind of last resort insurer, and maybe have kind of a bit of a cap on how much, value they can receive in case of a wildfire. So clearly, yes, we as a society, we're behind. I think companies are starting having a little bit of a wake-up call, because clearly if you're an area that I think with science, we get much better at actually predicting this risk. And in some instances, risk becomes a certainty. If it's a certainty, it's no longer insurable. But for a lot of companies, they can see the risk increasing. That means the premium increasing. So they can start waking up, well, hang on, I've got this factory. Well, first, I can obviously, if I no longer get this parts that I really need for my product, then I'm no longer being able to sell my product. But two, as well, that factory that's have developed for millions of pounds, maybe tomorrow could get flooded and I could lose everything. So and if you're already been flooded once, very unlikely you're going to find an insurer willing to support you. So I think we see companies paying a little more and more attention. And one of the good thing actually of Trump, I'm going to talk positively about Trump here, and the tariffs, is that companies now are starting disclosing to investors much better their supply chain. Because people want to know where things are coming, whether they're going to get a tariff or not, tax on it. And that means that we as investors now, we can better value risk of the companies to get into trouble because of climate risk or not. So I think the point I'm just trying to make here is that yes, the market is not paying enough attention. They tend to be short-term focused. We as investors and with people's pension, we take more of a longer-term approach. And by doing so and obviously focus on climate, we can reduce the risk of your clients' portfolios to suffer dramatically from those risks that are ahead of us.
Yeah, great. I mean, clearly where we've reached a point where millions of people can't get insurance and therefore the state has to insure them, particularly in the US, and all of a sudden the state is becoming the biggest insurer with the risk it's got on the books, then that's the start of a fundamental shift, isn't it, in terms of how we live as a society. And you would think that markets will start to price that back in at some point, which is interesting.